Hey guys, Scott here with Homeport Residential. Today we're going to talk about a very exciting topic, buyer's closing cost. Okay, I'm kidding. Now I know that closing costs can be very frustrating and a confusing topic, but stay with me. I'm going to do my best to break them down and simplify closing costs for you as much as possible. So now for this video, I will be talking specifically about the buyer's closing cost here in San Diego. However, these basic costs apply throughout the country and should give you a good idea what questions you should ask your local realtor and lender. Look, I know this stuff is super boring, but stick around because at the end of the video, I'm going to give you guys some tips for getting some or all of your closing costs paid for, and I'm also going to tell you how to avoid paying those junk or garbage fees along with your closing cost. We'll start very simply with the definition of closing cost, and those are the expenses buyers and sellers normally incur in the transfer of home ownership over and above the cost of the home. Seems pretty simple, right? Well, depending on the type of home you purchase, month of year, and the day of the month you purchase your home, the type of home loan you're using, closing costs can vary between 2 and 4% the total purchase price of your home. So on a $500,000 purchase, which is about standard here in San Diego, that 2% difference is up to $10,000. So the good news is most title and escrow companies have easy to use applications that allow your realtor to estimate your closing costs on the fly. I have Fidelity National Title's application, which allows me to estimate my buyer's closing cost on my iPhone or my tablet while we're out looking at homes. Now, this is just an estimate, but it will give you a good idea what to expect and you won't be going into your home purchase flying blind. Now, the 4 main categories of closing costs include lender fees, prepaid fees and prorations, title and escrow fees, and miscellaneous fees. For the sake of this discussion, we're going to be using a purchase price of $500,000, using a conventional home loan, putting 5% down, a closing date of 15 October, an interest rate of 3%, a tax rate of 1.15%, homeowner's insurance at $100 per month, and the buyer will be paying 1 discount point for a home that has $250 a month HOA fee. Additionally, the seller's current taxable assessed value of the home is $500,000. As you can see from this example, there are a lot of variables that have to be considered when determining how much closing costs you, the buyer, will actually pay. Let's take a look at those lender fees. You have an origination fee, usually a percentage of the total loan amount and primarily how your loan officer gets paid. You have a processing fee between $500 and $1,000, and this is an administrative fee the lender uses to cover the cost of processing your loan. You have an underwriting fee between $500 and $1,000, an appraisal fee, which is approximately $500, and discount points or fees, usually a percentage of the total loan amount. Don't forget to ask your lender ahead of time if they charge any of these fees and how much they are. You'll also want to find out if you have to pay a discount point or fee for the interest rate that your lender has quoted you. For this example, the origination fee is 0.25% and comes to $1,187.50. There is 1 discount point charged for the interest rate. 1 point equals 1% of the total loan amount. Since our buyer is putting 5% down on $500,000, that's a $475,000 loan. So they are paying $4,750 for the privilege of that 3% interest rate. The processing fee is $500 and the underwriting fee is $995. The appraisal fee is $500 and covers the cost of the appraisal to ensure the home is worth the amount of money the bank is going to lend on the home. The flood certificate fee is $26 and used to determine if the home is in a floodplain. The tax service fee you see listed at $250, this is a fee the bank uses to track the tax payments on your home. Your lender wants to make certain you're paying your tax bill on time because if you don't, that can create a tax lien for the county on your home that takes precedence over your lender's home loan. And your lender wants to know immediately if that happens so they can take steps to protect their investment. Next, let's take a look at those prorations and prepaid sections. The prorations and adjustments section is used to ensure that the sellers aren't paying the property taxes or the HOA dues after the sale of the home and the buyer's living there. Since the sellers will have paid the property taxes through the end of the year and the HOA dues through the end of the month, the sellers are given a credit back paid for by the buyers that starts the day after the home sale closes. In this case, that works out to $1,200 in property taxes and $133 in HOA fees paid back to the seller by the buyer. Now, let's take a look at those prepaid costs. Now, these are costs collected by your lender and placed in an escrow account for you, the buyer, to ensure you have enough money to pay for your homeowner's insurance and property taxes for the year, along with the principal and interest on your home loan. You may have heard the term PITI or PITI, which stands for principal, interest, taxes, and insurance. Your lender also collects the interest until the end of the month of your closing and 1 or 2 months of HOA fees if they apply. So in this example, the homeowner's insurance is paid 12 months in advance and totals $1,200. 16 days of prepaid interest from the 15th until the end of the month at $585. 4 months of property taxes at $1,920. Now again, this tax rate is paid based on the assessed value of the seller's home, which we said was $500,000, or conveniently our purchase price. If the seller's assessed value is less than the purchase price of the home, after you close on the home about 6 months later, you'll receive what's known as a supplemental tax bill. Now this is a separate topic. I'll be doing a separate video on supplemental taxes. But for now, guys, just be sure to ask your realtor if supplemental taxes will apply to your home purchase. And then we have 2 months of prepaid HOA dues at $500. Next, we're going to talk about those title and escrow fees. We see the e-recording fee listed at $14.45, and that's what you pay for recording all your loan and escrow documents electronically. The escrow fee is $1,200. Now, the escrow company is paid to hold all the deposits for the home purchase, ensure all line items for the purchase agreement are met by both the sellers and the buyers. When all those items are complete, the escrow company disperses the seller's funds, directs the recording of the home in the new buyer's name. Essentially, guys, the escrow company is a neutral third-party company that helps manage the sale and purchase of real property. In other words, home sales. Then you see a new loan service fee of $340 is also paid to the escrow company to handle all the coordination and documentation required for the processing and, most importantly, the funding of your home loan. There's a $30 special messenger fee, which is not always applicable and is usually required if you need a rush or expedited file and a courier service is required. The $200 signing service fee is paid to the notary officer who will walk you through and notarize your final loan and escrow document signing. The title insurance fee is $898. Title insurance is designed to protect yourself and your lender from any claims from your home's title, from past errors, construction or mechanics liens, and a host of other issues. Now, there are 2 types of title insurance. Owner's title insurance, which protects you, the homeowner, and is usually paid by the sellers. Then there is lender's title insurance, which protects your mortgage lender and is usually paid by you, the buyer. The $898 you see listed in this example is the lender's title insurance, and that's why it's reflected in the buyer's closing cost. That brings us to miscellaneous fees. These fees can include but aren't limited to things like your home inspection, termite inspection, other inspections, a home warranty, or HOA transfer fees if they apply. The home inspection usually costs between $500 and $1,000 depending on the size and type of the home. The termite inspection is around $100, and then as a buyer, you are free to conduct any other type of inspection you would like to have and are willing to pay for. Other inspections could include plumbing, electrical, foundation, mold, and conducting a lot survey, and the list goes on and on. Now, you usually won't see these inspections listed in the closing cost estimate because you normally pay the inspector on site on the day of the inspection, and those bills generally aren't handled through escrow. So keep in mind you'll have to add these costs into your total closing cost of your home purchase for planning purposes. The home warranty and HOA transfer fees, if they apply, normally cost between $500 and $750, and those are normally paid for by the seller. I only mention them here to reiterate the fact all closing costs are negotiable, and sometimes buyers do end up paying for these items. So the total closing cost for our example purchase totaled $16,889.28, or roughly 3.4% of the purchase price. One final thing I'll point out about this example is the title and escrow fees were quoted from Fidelity National Title and Escrow. Now, different title and escrow companies are going to charge different rates. I wouldn't expect your charges to be significantly different, but you should always ask your escrow officer to give you an updated closing cost estimate once you open escrow on your home purchase. Okay, like I promised earlier, let's talk about a few options to get some or all of your closing costs covered and some of those junk fees to watch out for. Other than getting a gift from a family member or paying your closing costs out of pocket, there are two potential ways to get some of your closing costs covered. The first method refers to those zero closing cost ads most of us have seen on billboards or buses around town. Now, rest assured guys, there's no such thing as zero closing costs on a home purchase. And these ads are misleading and come with a very large asterisk for their fine print. However, they do present a possible solution for buyers who cannot afford both their down payment and a hefty closing cost bill. The way it works is lenders will offer their buyers a higher interest rate than the buyer originally qualified for, and then the lender gives a buyer a credit towards their closing cost. Let's say, for example, the buyer originally qualified for a 3% interest rate. Your lender might offer you the option to take a 4% interest rate and then give you a $10,000 credit towards your closing cost. So you can see you're still paying the closing cost, you're just not paying them up front, but you will be paying a higher monthly mortgage payment every month. This option isn't right for everyone, but it is an option available for buyers without another alternative. I would make certain to discuss all the pros and cons of these closing cost programs with your lender and make the best decision for you and your family. Now, the second way to get some or all of your closing costs covered is with a seller credit. You might offer the seller a higher purchase price than the sellers are asking for, and then request a seller credit to cover your closing costs in the amount above the seller's asking price. Now, I gotta be real here, guys. If you're in a red hot market like San Diego, you often end up competing with multiple offers, and it's a lot less likely sellers will agree to this request. It never hurts to ask your realtor if this is a potential option. A good rule of thumb here, if the home has just hit the market, sellers are less likely to grant any type of special request. However, if the home's been for sale for 2 or 3 months or longer, the sellers will be far more likely to make this type of concession. Now, here's a shameless plug plus one more alternative that can help with some of your closing costs. If Homeport Residential helps you with your home purchase, you'll receive a closing cost credit that's based on the purchase price of your home. You can see more details about this program or find out how much cash back your home purchase qualifies by clicking the link in the description below. Finally, let's talk about those junk fees. Unfortunately, guys, the two main junk and garbage fees that I normally see are charged by other realtors. There's an administrative fee that's charged by the realtor to their client, and a TC fee or transaction coordinator fee that's charged by the realtor as well. Now, you'll often first see these fees appear in the buyer's purchase agreement or contract. And it's technically incorrect to put those fees in the purchase agreement because this is a contract between the buyers and the sellers. And while the realtor will sign the purchase agreement, they are not parties to that contract. However, these agents know that the buyers see these fees on the purchase contract, they look official enough, and the buyers are very unlikely to question them. Now, for those buyers using their VA home loan to purchase their home, these two junk fees or any junk fees are specifically not allowed to be charged to the buyer, which is a great thing. For all the other buyers out there, you just need to be certain to evaluate all of your closing costs and ask your realtor, do they charge these junk fees, and let them know you simply don't want to pay them. I know we covered a lot of information in a very short amount of time. In the Navy, we call this the fire hose method. I'm happy to answer any questions you might have in either the comments down below, or you can always reach out to me directly. My contact information is in the description section. Thanks again for tuning in, guys. I'll see you next time.